Hey guys, welcome back. My name is David St. Joseph. I'm a licensed agent here in New York City. I'm here with Andre Romanek, who is my preferred lender. Today's video is about mortgages, being a first-time buyer, and the things that you should do and shouldn't do while trying to get a loan or in the process of getting a loan. What are the pros and cons of using an FHA loan?
Good question. So the obvious positive of an FHA loan is that the ability of being able to get into a single or even a multifamily home with as little as 3.5% down. Right? So you don't need to have, 20, 30, 40% down, as some people have a very common misconception that that's what you need to be able to buy a home.
Mm-hmm.
With an FHA loan, the minimum down payment is only 3.5% down.
Right.
And as mentioned earlier, is that it's designed to make it more affordable, where you don't have to have the massive savings. You do need to have the income to show that you have the means to be able to afford a home of that size, right? But it does allow for more flexibility when it comes to certain expenses and things of that go into the total pot of determining of what would be the max loan that you will qualify for.
Got it. Okay.
So that's one of the main benefits, is that you don't need to have everything perfect, right, in order to be able to get yourself on the home.
Got it.
The downside is that any loan that you typically have less than 20% down, you're going to have something what's called mortgage insurance or private mortgage insurance. So with an FHA loan, that mortgage insurance typically is there for the life of the loan, depending on whether or not you're making a small down payment or you go more than 10% down. So, one of the negatives is that that mortgage insurance is there for many, many years to come, versus where with a conventional loan, with that mortgage insurance might disappear some years into the future.
Okay. Yeah.
So this is a great loan for as an entry level to get yourself into the home ownership process, right? And then as your situation improves over time, what a lot of times we do is we try to figure out an alternative of how to restructure and maybe put you in a different loan, like a conventional or any other loan that you will qualify for at that time, to be able to eliminate or reduce the mortgage insurance on a monthly basis and create some sort of a savings moving forward.
Right.
So it's not your forever loan, right? But this is a loan that's designed to help primarily first-time buyers accomplish the goal of becoming homeowners.
Got it. So essentially, it's sort of like your way of getting in.
That's it.
Right? Once you get in, you settle down, you're in, then you could kind of like, do what you have to do to make things a little bit more comfortable for you.
Yeah, much like as an entry-level loan, it's primarily for your entry-level of a house, right?
Right.
Because oftentimes your first house is not your last house, right? Most people typically move or relocate at an average of 5-7 years, so that as your scenario improves over time, now you know what to expect, right? You have the knowledge, or maybe you build up a little extra savings, or maybe you have a profit in your home that you're selling, and maybe now you could qualify for a different loan that would maybe put you in a better position in the future. But ultimately what it comes down to is working with an experienced loan officer who's able to compare the different options side by side and figure out what would be the perfect loan for you.
Understood.